Welcome to Financial Forensics, where we look beyond the headlines and examine the money, transactions, and incentives behind the biggest stories in business and markets. Today, we're turning our attention to Airbnb and to two very large insider stock transactions that deserve a closer look. On August 7th, 2026, Airbnb co-founder and Chief Strategy Officer Nathan Blecharczyk sold approximately $92.6 million worth of Class A Airbnb shares. The transaction involved roughly 530,000 shares, sold at prices ranging from $165 to $177.21 per share. But that's only half of the story. On the very same date, Airbnb CEO and Chairman Brian Chesky also disposed of approximately $35 million worth of Class A shares. According to the reported filing, the transactions totaled about $34.96 million. So, between two of Airbnb's most important insiders, we're looking at roughly $127.6 million in stock sales. That number is big enough to attract attention. But financial forensics is about separating the signal from the noise. First, we need to understand who these sellers are. Nathan Blecharczyk is not simply an executive. He is an Airbnb co-founder and currently serves as Chief Strategy Officer. Airbnb itself identifies him as one of the company's founders alongside Brian Chesky and Joe Gebbia. Brian Chesky, meanwhile, remains Airbnb's co-founder, CEO, and chairman. When founders and senior executives sell shares, investors naturally ask one question: do they know something the market doesn't? Not necessarily. And here's where the mechanics become extremely important. Both transactions were conducted under Rule 10b-5-1 trading plans. Chesky's plan was adopted on February 26, 2026, while Blecharczyk's reported sales were made pursuant to a previously established trading plan. A 10b-5-1 plan allows an insider to establish predetermined instructions for buying or selling shares, helping provide a legal framework for transactions that might otherwise raise questions about trading on material non-public information. In other words, an insider sale does not automatically mean management thinks Airbnb is about to collapse. Executives sell stock for many reasons: diversification, liquidity, taxes, estate planning, or simply because a substantial portion of their personal wealth is tied to one company. But there is still a forensic question worth asking. Why now? The timing is interesting because Airbnb's stock has recently experienced a significant run. Reports following Blecharczyk's transactions noted Airbnb shares trading near a 52-week high, with the stock up substantially over the previous year. That creates an important distinction. Selling after a major appreciation can be perfectly rational portfolio management. But from an investor's perspective, it also tells us something about the price at which insiders are willing to convert equity into cash. And there's another piece of context. Airbnb remains a massive global platform. The company says it now has more than 5.5 million hosts, listings across more than 220 countries and regions, and more than 2.5 billion guest arrivals over its history. The business is also trying to expand beyond its traditional home rental model, including services and experiences. CEO Brian Chesky has described services as potentially becoming a multi-billion-dollar business opportunity. So the forensic conclusion isn't that Airbnb's insiders are necessarily bearish. The more interesting conclusion is this: Airbnb's founders and CEO are monetizing part of their enormous equity positions while the company continues to pursue its next phase of growth. For investors, the right response isn't panic, and it isn't blind optimism. It's investigation. Look at the filing dates. Look at the trading plans. Look at the number of shares sold. Look at the remaining ownership. And most importantly, compare insider selling with Airbnb's fundamentals, valuation, cash generation, growth expectations, and stock price performance. A $92.6 million sale sounds dramatic. A $35 million sale sounds dramatic. Together, they make a compelling headline. But the real financial story is hidden in the details. This is Financial Forensics. I'm John Luca from www.ascentinvestigate.com. And remember, when insiders move millions, don't just ask what they sold. Ask why, when, under what plan, and what they still own. Until next time, follow the money and investigate the transaction behind the headline.